Welcome back. Now, the BankservAfrica Economic Transactions Index shows a 1.9% early economic improvement, reaching an index level of 133 in December. This rise is attributed to reduced load shedding and lower fuel prices during the festive season. However, despite surpassing the year-on-year basis level, experts suggest that the slight uptick is not indicative of a significant economic recovery in 2024. Independent Economist Elze Kruger joins us to unpack the report in greater detail. Elise, thank you so much for your time today.
Good afternoon, Noluthando.
Well, Elise, we would want to celebrate a little bit about, this uptick that we're seeing here in the BETI, but of course, it's important to be cautious in our optimism. Just talk to us about how to interpret this number at this point.
Yes, indeed. BETI did end 2023 at a better note. However, if we compare it to the year as a whole, like you mentioned, only 0.6 percentage above the beginning of the year level. And actually, if you compare to middle of the year, it was 2.5% lower still. So we really had a dismal year, overall in 2023. And we only saw a small tick up in December. Now, so from that point of view, we cannot, certain say we are seeing a start of a trend that will be significantly better in 2024 compared to 2023, because we still have a number of challenges that are still with us and that will still continue to play out throughout the course of this year.
Of course, a lot of these challenges are deeply structural, load shedding issues with logistics, but also, I think, confidence. And I think, in a new year, at least, people try to be a little bit optimistic about the state of affairs. And I think it would bode well for South Africans to try to enter 2024 with a little bit of more optimism. But truthfully, the fundamentals don't inspire confidence, not for households or for businesses.
Yes, not at this point in time, Noluthando, although there are a couple of positive factors which I hope will result in 2024 being a slightly better year compared to 2023. Specifically, if we look at the international space, we should hopefully see some interest rate cuts in the US and most likely also in Europe. So that will set the scene for South African interest rates also to be cut throughout the course of this year, partly due to the fact that we also see our inflation rate coming down, moderating further into 2024. So that should at least alleviate some of the pressure that households have been experiencing sort of at the height of all these sort of factors coming together. But that will only most probably help us a bit more towards the middle of the year and towards the end of the year. Because at this point in time, expectations are that the US will only start to cut their rates, somewhere between the March or May meeting, and I think the focus seemed to move towards May. So I think South Africa will wait to see what's happening globally, and it will also depend on our side, on inflation. And, looking at the current level of the rand exchange rate, I am a bit concerned that we might see our inflation rate maybe being a bit more sticky than what we hoped for in 2024.
I must also ask you, measuring for the month of December as when we saw a ports crisis. It really was at crisis levels. Of course, we seem to be trying to fix that, and it seems to be under control at this point. But I'm wondering how that would have fed into the BETI. The fact that we had the supply chain backlogs at our ports, at least, and how that might have impacted economic transactions, but even the mood in December.
Yes, actually, December was now a bit strong compared to November. So in November, I thought that did play a role when we had a fairly dismal BETI. But in December, actually transactions picked up nicely. So it's not clear to me that, the port issues have really impacted so much negatively on us in December, although it could have just been offset by more growth and more activity in other sectors. Still, the ports remain quite important, and it will remain a factor in economic activity in the early months of this year.
Let's also touch on a festive season, a spending festive season, mood, and how that may also have fed into the BETI. It is a time when even people would rather go and look for credit, to spend during this period than not to be in that festive spending mood.
Yes, so the BETI is seasonally adjusted, as you know. So we do strip out, the impact of like Christmas spending season. So from that point of view, we are looking at it really as a fundamental, better number, and not a number that was driven by festive spending season. But I do think the festive spending season, perhaps, have been okay. But if you I think back about Black Friday sales, that's been quite disappointing. It has been clear that households are still under significant financial pressure. So it will remains to be seen whether we can see that changing during the course of this year.
There is an expectation that South Africa's economic growth will almost double in 2024. On the back of the number that we're seeing in December, is there an indication of that? And I'm also keen to hear from you, Elise, where the growth would come from in 2024. Where would South Africa be able to eke out some value, considering what we've both said about issues of such as load shedding and some of our rail and port issues really persisting into the year? Does this number of 1.5% about look realistic?
Yeah, so that is an important question to say what is driving the expectation that we might see slightly better economic growth outlook, for 2024. On my side, it has been driven, I would say, in terms of load shedding, an expectation that it will not be worse than last year, but rather an hope that we might see lower levels overall and cumulatively for the year. If you look at renewable projects that would potentially come on stream this year, that will add some capacity to the grid, and that could alleviate the load shedding level somewhat compared to 2023. So that will already be, a source of better potential economic activity if we have lower levels. So that on the one side, and I've mentioned the expectation that interest rates might be cut in South Africa. I have factored in 75 basis points in cuts throughout the year, most probably in 25 basis point increments. And also lower inflation rate. We're looking, and my forecast is a 5.2% average for this year. That compares to last year's estimate of 6%. And if you think about wage increases, hopefully we will be a bit closer in terms of inflation compared to last year. So that will just add a bit more in terms of disposable income in households' pockets.
Brilliant. Well, Elise, it's always a pleasure speaking to you. Thank you so much for your time today. That was Independent Economist Elze Kruger.